Hi everybody, this is SPI from MyChartCoach.com, and in this video we're going to take a look at mainly the energy sector. Might have thrown an extra one in there, but first up we're going to take a look here at United States Oil Fund, ticker symbol USO. So that was a break above resistance today. It did push higher. The closing price on the 21st was the key level to close above, and that did happen today. And so now that's the key level to turn into support. You want to see it stay above this, up here near this 1470 level, the high close here, and that would signal it wants to keep pushing higher. The last two candles did form above this upper Bollinger Band, so if it did cool down, it'd be best if it stayed above 1470. If it dropped below, as long as EMA 1446 is holding, this is still a super strong breakout. And so when anything's breaking out on the daily chart, we like to look at the weekly chart for the next key resistance levels. And as you can see here, there's this red line. This is the 200-week moving average. And you have to go way back here into 2014 to find the last close above the 200-week moving average. Now, this week's candle will not close until, or will not set until the closing bell tomorrow. But as long as the close tomorrow for USO it is above 1410, this will be the first weekly close above the 200-week moving average since 2014. So it looks like you have to go all the way back. What is this? This is like August of 2014. So this is a monumental move. So there is a giant breakout going on for USO for oil, and if it does stay on this upward trajectory, that it signals more upside potential. Now the key level to break now is going to be the $16 level. You can see there's some resistance here that was a temporary top, and so that's going to be a big level to break. If it does end up getting above 16, there's a gap up here between 18 and 19 between these two candles. That might be something that might get filled in the future if the uptrend continues. And then you have the 300-week moving average way up here at 21.6. The candles got above the 50 and 100-week moving averages down here in 2017, and it's been in a really strong uptrend ever since. Okay, if we look at UWT here, this is velocity shares 3 times long crude oil. It has a very similar pattern on the charts. You can see here that May 21st was the key level to break. It did close above that level today. So now the level to hold is 41.50. So if it stays above 41.50, that's going to signal more upside potential. If it drops below 41.50, you could see some consolidation. And then what you want to see is this 38.76 level, this EMA 4 level hold. Today's candle is floating above that upper Bollinger Band, which is down here at 39.26. And so sometimes the candles do work into the bands when the stock or an ETF or whatever it is you're charting gets ahead of itself. And so, yeah, this is a very strong breakout. It needs to keep pushing above 41.50. Now, if you look at UWT weekly chart, it started trading back here in 2016, and this is the complete history of the trading of this ETF. And as you can see this week, it's breaking out above high close resistance. That was the second week of May, was the all-time high close here for this chart. And so basically, what it's doing now is breaking out into all-time high levels. Today or this week, an all-time high was made up here at 43, and you can see here that that it broke above the previous all-time high from back here in May, and so going forward, 43 is going to be the big level to break. Above 43 for UWT, it is a blue sky breakout. That's uncharted waters. There's no horizontal resistance or descending resistance. It's only going to be the intraday charts that will be able to find resistance levels. Okay, so let's look at XLE here. And then if it stalls out at this 43, this could be a level where it takes a breather. You never know. Okay, let's look at XLE here. This is the energy select. This is the energy ETF, and as you can see here, it actually closed down 13%. So not everything was doing well in the energy sector today. And so the big thing with this chart, in my opinion, it's all about two levels. The middle Bollinger Band at 75.30 and the 50-day simple moving average at 75.08. On the chart here, that's the green line and the dotted purple line. If the candles stay above both of those levels, this uptrend should continue here. It's trying to get a new uptrend going. If it fails to hold that 75 level, that's when it could consolidate. Right now, it's basically trading in this channel. It's back in this range between 77 and 73.50. And so right here at 75.50, it's right in the middle of this range. And so going forward, if it breaks out above 77, that's going to signal more upside potential. And if it drops below 73.50, that's going to signal downside risk. Really, it needs to stay above 75 for the bulls. It's bullish above 75. If it gets below 75, that's going to signal more consolidation. The bears are taking control. If 75 holds, look for it to work its way back up to the 77 level. That was the high close from back here in January. That was the big level to break. There was a break above that level in May, and that did signal more upside potential. Okay, so you had the high close here in January, and it came up and hit that level, and then breaking above it is signaling that it wants to head higher. So what has to happen now is it has to make a new high. So the 78.50 level is going to be a big level to break. Okay, let's look at XLE on the weekly chart, and you can see here the same type of setup. You know, you have the candles are working between, you have ascending support, and then you have ascending resistance. And so right now that 78 level is lined up with the top. You can see the ascending resistance and it's you know, horizontal resistance lined up right here. And so that's going to be your big level to break. And so above 78 should signal that it wants to push higher. Yeah, and right now it's all about holding EMA 13. That's basically at 74. If it were to drop below 74, that would be a red flag and would signal possible consolidation. Okay, so let's look at some individual stocks here. So here's CEI, huge follow through today. It did close up another 87%, almost 86.5%. That was after the monster move yesterday. So that's a really sweet 2-day move. Unfortunately, it isn't all wonderful because it did run up to 180, which was incredible considering, you know, the open was down here just below 80, and so you know it really put on some gains early in the day, but it gave them back, and it ended up closing below the key level. That's the 100-day simple moving average at 97. It needs to close above that level and turn into support to head higher. If it turns into resistance, the downside risk is the gap below could fill. There's a gap between low of day on that candle and high of day on this candle, so it dropped down to about 60 here would fill the gap. Now look at the okay, yeah, and let's see here on the dilution factor. Yeah, look at accumulation distribution. See how it's a huge spike down and a huge spike down on CMF. I mean, even though there was a giant volume spike, look at that, 85 million shares traded, and you had, you know, the share price up 86%. So you'd expect a major accumulation. You know, people were loading heavy, but they weren't. That long upper wick here on the candle, that signals dilution. They were selling shares. They dumped into the rally, and we can see that on these two indicators, the spikes down. You know, on a really bullish day, there should be a big spike up. Okay, you could see yesterday that was the first green histogram bar on the CMF in many months. Okay, so let's look at the 15-minute chart. That's what I'm going to do for these next plays, and you can see how they look. You can see the pullbacks, and it happened across the board today, and there was a bear raid, and what happens is everybody gets into the trade, and so what do they love to do once everybody's into it and everybody realizes, okay, yeah, the energy sector, they're running, this is it, and then they pull the rug. I mean, it happens quite a bit with the penny stocks. You have to be able to, you know, just expect that does come with the territory, and they do like to, you know, when everybody gets really hot onto it, and it's been on a multi-day run type of thing, you know, they do like to test the bulls and pull it back. Today that happened across the board for the energy stocks. They ran it up here, had the big volume at the open, and then they pulled it back. It got below the middle Bollinger Band, so it's going to have to get back above 103 to head higher. Above 103 is going to signal it wants to push higher, and then this 150 to 155 resistance zone is going to be the big level of break, the close here on at 10:30, and then to the downside it needs to hold 74. If 74 fails to hold, what could happen is the gap between low of day today and then high of day yesterday could fill, and so that's the setup on these gap up open plays today, is that they could pull back now and fill the gap. So a drop down to 60 would fill the gap. A gap fill could set up a technical bounce, you know, so it could come down here and see the gap between these two candles. It could come down here to 60 and fill that gap. Okay, so yeah, let's look at MNGA here. MNGA had a nice move today, closed up 51%, but it also had the long upper wick. It did close above the 50-day simple moving average, so that was very bullish, and it also closed above the middle Bollinger Band. You could see here the dotted purple line. You know, each time it tried to get above this level, it failed, and so you have to go way back here to, what is this, January 16th was the last close above the middle Bollinger Band, above the dotted purple line, the 20-day simple moving average. So that's a very bullish change in trend. Now it also closed above the 50-day simple moving average, and that's the green line. And so you have to go off this chart to find the last close. There hasn't been a close above the 50-day simple moving average in the year 2018 until today. And so that is very bullish. That does signal more upside potential. Unfortunately, it has the long upper wick here, and so that does show profit taking. You know, it just has to stay above 54. That would make it that would be the best case scenario for the bulls here. Stay above 54 and then break the 100-day simple moving average at 80. That's the big level to break. It got above it intraday and pulled back, and that was a lock-in gain signal. When you get above a key level like that and it pulls back, that's a signal if you're a trader to lock in gains. Now that sets you up for the reload back down here off that 50-day simple moving average. If it holds, then it should push higher. If it drops below, then you could see that middle Bollinger Band at 42 retested. Check out the 15-minute chart here. You could see the super tight Bollinger Band yesterday before the breakout. You know, this was really setting up. You know, you have the very tight Bollinger Bands. The Bollinger Bands are the two purple lines here, and then boom, you had the breakout higher. This had the very nasty pullback end of day. It kind of seemed like when the large caps and started reversing and running, that there was a pullback in a lot of these small cap runners, and so you had the pullback here, and then when it got below the middle Bollinger Band, it did signal downside risk. Right now, it's hitting the 50 simple moving average at 54. It has to hold that level. If it dropped below, that'd be a red flag. It could drop down to 45. A break above 59 would be bullish. It has to get above 72 to get an uptrend going again on the 15-minute chart. Okay, take a look at JONE, J-O-N-E, closed up 19% today. The chart's heating up. It had the long upper wick, another long upper wick deal. You know, it was on a multi-day run here, you know, bounce on very light volume, and then today the volume came in. There was big volume last Friday. You can see the big volume spike at 7 million shares, and it was on a tight trading range, so that looked like the load to us, like people were loading down here at the bottom, and then there was the big breakout today. And so today as well, there was a close above the middle Bollinger Band. It has to stay above that level at 39.5. 395. If it drops below that, that'll signal it's not ready to go. And then what you're looking for now is a back up above this 50-day simple moving average at 545. You could see back here in May that level got hit multiple times and there failed to be a close above. Once there's a close above that 50-day simple moving average, that's going to be the signal that it wants to break out higher. There was big volume today. They definitely were dumping some shares, but people might have been loading as well. We're going to know whether or not they're going to take this higher by whether or not it stays above 40 cents. Check out the 15-minute chart here. This is where I was showing today in the chat the long upper wick. You could see the big run up, long upper wick, and the big volume spike down here. This is what we call the climax spike. This is the intraday climax spike. For all these stocks, you know, when they get to a peak, you know, many times they have this classic setup, and so this is your signal to lock in gains if you're trying to lock in the high of day gains, and then it sets you up for the potential reload lower. It came down here and it bounced temporarily off the middle Bollinger Band, but it failed to hold and it pulled back. So what it needs to hold now is that 50 simple moving average at 393. If it could stay above that level and get back above the middle Bollinger Band at 45, then it could get pushing again. I mean, it's got the setup on the daily chart. It looks like it wants to head higher. It's just had that nasty pullback along with the sector. Once it gets above 50, that's going to be the signal that it wants to break out higher. So, you know, it had the nice run. It pulled back. It still, you know, closed well above the open, up, you know, 18.5% on the day. It just has to get back above 45. Okay, take a look at GST. Another similar kind of setup. It only closed up 7% today, but it's heating up. You know, it has a very similar pattern to JONE, you know, where it was creeping low slowly off the bottom with a couple of dojis and very small volume bars. And then today there was the close above the middle Bollinger Band at 58. If that level holds, that's going to signal upside potential. If it drops below that 58 level, that's going to signal it's not ready to go. This is the one that has the really big volume spike on Friday. Look at that volume spike. I mean, that to me looks like the load. I mean, today, you know, there was some profit taking off of this 50-day simple moving average at 655. That's the next key level to break. You can see all these candles hit that, failed to break, and then, you know, pulled back. And so it's going to have to get above that level to head higher. But you know, at only 3.6 million shares traded today, it's nowhere near the 18 million on that load down here. This looks like a load, you know, like, you know, you have a huge volume at the bottom. And so it looks like people are still holding, you know, for higher levels. It's not like it doesn't, you know, there wasn't a giant volume spike today where they were dumping heavy. It's just, you know, there was profit taking after that spike up. Okay, so it's all about holding 58, getting a new uptrend going, and then running up to this 50-day simple moving average. If it gets above that level, the 100-day simple moving average at 694 will be on deck. Okay, same setup. See, for us, it's not necessarily as much about the ticker symbol as it is about the chart pattern. As you can see, these patterns repeat over and over again, and then if you have the right patterns, then you can profit off the trade. And so you know, finding the right setups is key. And then one of the keys is finding the right sector. You know, when the sector is in play, then you look for individual stocks. And as you can see with the algorithms, many times they form very similar setups. And so here it's the same thing, where it got below the middle Bollinger Band, and now GST is testing the 50 simple moving average at 578. If that level holds, then it can bounce off that level and get going again. It needs to get above that middle Bollinger Band at 61. You know, it has to turn that level back into support, and then it has to get back above 63. Stocks have to keep making new high closes to push higher. If it were to drop below 58, that would signal consolidation. That would be a red flag. What would happen for every one of these stocks that I'm showing you that are testing the 50 simple moving average on the 15-minute chart? If it breaks, they go down to the next moving averages. That's where you would get the 100, 200, and 300-day simple moving averages tested. Once they get below the 50, if you can get a reload off the 300 simple moving average, that's many times the good low entry point if support holds. Always a bad sign if the 300 simple moving average doesn't hold in the 15-minute chart. That's a major red flag. Like that's a good sign if you're bearish and you're shorting the stock. But if you're long the stock, that's a major red flag. Okay, let's look at SPI. Closed up 2% today. So this is a very ugly candle. And so, yeah, it's just a bummer when this happens. That's why, you know, I recommend to everyone, you know, when you see the setup happen, because what happens is with these penny stocks is they're trading vehicles, most of them, and many of these stocks are, you know, we chart these over and over again, and the same patterns keep happening over and over again. And so when you see a black candle like this, there's a gap up open, a black candle, you want to look and see how the history happens after the black candle forms. What's the trading afterwards? And you can see black candle, red, black candle, red, black candle, red. So now we have a black candle. What's the historical trend? Red. You know, is it going to be red again? Well, we're going to know if this is maybe going to be a bullish change in trend. And the only thing that's going to save this sucker is this 50 simple moving average. The last time the black candle formed, it closed below the green line, below the 50-day simple moving average. This time, there's been 2 closes in a row above the 50-day simple moving average. So that means that it's still alive, okay? Even though this is a very ugly candle, and this is not what we want to see at all, and we know they diluted like crazy, technically, it is still in play. It has the 50-day simple moving average as the key level to hold here. If it can hold that level at 423, then that's going to be the signal that it wants to head higher. If it drops below the 50-day simple moving average at 423, that's going to signal downside risk. It's as simple as that. And so if it does hold that level, you know, that would be a nice level to bounce off. And then what it needs to do is get back above that 100-day simple moving average at 56. Above 56 would signal it wants to head higher. If you look here on the 15-minute chart, you can see the big pullback. It has the super long pullback here off of high of day. Yeah, sorry about that. I've got a window open and the neighbor's doing some woodworking. Sorry about that. Yeah, so it pulled all the way back down here below the 50 simple moving average. So that is a red flag. It broke below support. and that's not what you want to see. So basically, you want to try to get out, when you see the chart breaking down on these penny stocks after they've been on a run, just so you can be set up for reload lower and also to protect you from downside risk. And so when that middle Bollinger Band breaks, it does signal that it's a risk to hold overnight. And when it fails to hold the 50 simple moving average, that's the last line of defense. So now for SPI, what you're looking for is a bounce off of this 40 support zone. If it hits 40, it should get a technical bounce off of that level. Okay, let's look at HUSA. Okay, closed up 26% today. Now it formed an indecision candle. This is almost a doji. I mean, a doji forms when the open and the close are at the same level. You could see the open was at 40 and the close was at 3978. I mean, that's pretty darn close to a doji for me. So you could either call this a long-legged doji, or if you want to get super technical, you could call it a spinning top. Regardless of what you want to label this candle, it signals indecision. You had a run up to 47 and a drop down to 36, and what did it do? It closed right where it opened. It went nowhere on the day. It ran all the way up and all the way back, and it finished right where it started. It did nothing. Today was a complete wash. It was a good play for everybody that got the alerts yesterday and everybody that loaded yesterday, and then there was the gap up open, and so everyone that loaded yesterday were rewarded, and you were able to exit at some point today, and you did well because you loaded yesterday and it closed above the open, and so it was a successful day. But now there's a lot of risk because we don't know if it's going to be able to break this blue line. The blue line is the 300-day simple moving average at 40. If it fails to get above 40, the risk is it comes down here and fills a gap. There's a gap between high of day from yesterday at 34 and low of day today at 36. A drop down to 34 would fill the gap. If it starts pulling back, what you look for is a gap fill and a bounce off of 33. You should get a technical bounce off the 200-day simple moving average. Now to the upside, if it breaks out above 40, that's going to be really bullish, and then you're going to be wanting to ride it higher. And so, on a break above 40, this is the 15-minute chart for HUSA, we'll be looking for a break, a run back up to 46. That's the high close, and so that'll be the big level to break. It's going to need to make a close above 46 on the 15-minute chart to head higher. You can see they pulled it back and they closed it on what we call the 50-yard line. It closed right on the middle Bollinger Band, okay, 398 there. And so it could go either way here with this close. And so above 40 cents signals upside potential. If it drops below 40, that signals downside risk. Look for potential gap fill. And notice how the 50 simple moving average is lined up at 34 right with the bottom of the gap. Okay, take a look at JBR here. Now this is this wins the prize for ugliest candle of the day, ugliest chart of the day award. Just bull trap. This is what we call a bull trap. This is a great stock if you loaded yesterday or the day before or last week or in May or on one of these volume spikes, and you've just been waiting forever for something to happen, then maybe today was your big day. But most people, it was not a good day for them unless you were shorting GBR. There was a very small volume spike yesterday, so a few people did get in, and then the open is way up here. And so it opened way up here above $3, and it ran up to 360 and pulled back. And so what happens on this kind of play, if you get a gap up open like this, a big one, and you're like, okay, I'm going to ride it. I'm a greedy pig, and I'm looking for more, and I think it's going to keep pushing higher. And so if you want to play that game, then keep riding as long as it stays above the open. Once it drops below the open, that's a major red flag. To me, that's a sell signal. And so the open is right here, and so if you were in it pre-market or you were in last night or yesterday or whatever, and then it opens and then it's running up here, you're like, okay, I'm gonna ride this, and then it came down and it dropped below that level, that would be a signal to exit, because it signals that the chart is breaking down. And why do you exit there? Because look at the downside risk. If you held right here when it started trading below the open, forming the black candle is the red flag. That means the stock is open up on the day but trading above the open, and it's or trading above the previous day's close, and so it's up on the day but trading below the open, okay? And so that forms the black candle. Here's the close down here. So yesterday's close is down here, so it's up on the day, but below the open, forms the black candle. It signals the bears are in control, even though it was a big up day. And so the risk is it comes down here to 150 and it fills the gap. There's a gap between high of day yesterday and low of day today. And so, yeah, and you have to look at the history of trading and what type of rallies they have. And so, this has a history of not being able to sustain runs. And so that's more than likely able to happen again. And so that's why you want to try to lock in gains when they're on the table. And this is the 15-minute chart for GBR. You can see the black candle. It shows up on the 15-minute chart. When it's well above the upper Bollinger Band, that's a signal the candles are going to work back into the bands. And you had your out here on the black candle. If you didn't get out there, you had an out on the break below EMA 4, and then you got break below EMA 8, below EMA 13, below the middle Bollinger Band, and then below the 50 simple moving average. You could keep holding it and breaking all the support levels and just watch all the gains disappear. And so now it's down here, potential gap fill. I mean, now it looks like just drop it down to 148, fill the gap, and get a technical bounce off that level. That would be the best thing, because it wouldn't be good to try to push higher now without filling the gap, because the way these penny stocks work, they would come back at some point and fill that gap. So it's a healthier chart if gaps are filled before they push to new levels. Okay, look at VVPR here, closed up, and that's for for the penny stocks. Penny stocks fill gaps. Okay, VVPR closed up 61% today. Keep an eye on this one. This is one to have on the radar. It's a thinly traded stock. Look how low the average daily volume is. They walked this thing down on nothing, and then today there was a volume spike, and it did close above the middle Bollinger Band and the 50 and 100-day simple moving averages. It was the largest volume day since May 7th. It did have a rally back in May, and so who knows? This might be the start of the next push higher. It's got to stay above the 228 level, and then what you're looking for is a break above this top moving average, the 300-day simple moving average at 298. You can see here it's been the tough level. It has a chance to break out above that level, and then it would need to stay above. Once you get above the blue line, the top moving average, whatever that may be on the daily chart, it has to stay above. Once it drops below, that's a sell signal. This candle right here is the sell signal. This candle right here would be the sell signal. That when it was above and then it broke below, that signaled to sell, and you were sure glad that you did if you were in this, because look how far they dropped it down. Once it gets above a key moving average like that, it has to stay above. It becomes the stop loss level. If it breaks below, you don't want to be holding long. Just a little tip there. Okay, look at AMMA. Closed up nearly 23% today, so keep an eye on this one here. Just caught my eye on the close above. I think this was one we were talking about in the chat. It closed above the 50-day simple moving average, and it had been above intraday. It tried to get above that level earlier in the month and failed to. So this close above does signal more upside potential. That's one of the setups that we look for: close above the 50-day simple moving average. So now you're looking at a run up to the 100-day simple moving average at 47. It ran to that level last time it got above the 50-day simple moving average, and then what you're looking for now is a bullish change in trend and a close above that level to signal that it wants to head higher. Okay, thanks for viewing this video. Please come check out the chat. I'm giving out a free trial to come in there and check it out. I post lots of charts and information all through the day. We got just a good atmosphere to come and learn how to trade using charts and technical analysis. Okay, thank you.